Okay, look, there's always a silver lining in any set of dark clouds, and certainly there's no darker cloud than obviously the COVID-19, which really has impacted us in such a short period of time. Here we are at the 23rd of April, and really, I just remember going out to lunch with my good mate Sally Rourke on my birthday on the 20th of March. So that was only a month ago. And we just had the start of the concerns around lockdowns and that. And it's amazing what a difference a month can make. And particularly when a large proportion of Australia's population has basically been either reduced work hours, terminated work, or furloughed. And as a consequence of that, there's certainly cash flow problems. The JobKeeper, and I know Tim Munro and a lot of accountants have been on your system, have been some of your fantastic seminars, your webinars, which are really, attracted 15 to 2,000 people. It's amazing, and really to see the effort you put in around that JobKeeper. And it certainly does make a big difference for employers. And no doubt, I spent a bit of time this week also looking at the withdrawal of superannuation. And it now looks as though the government's revised its numbers from 1.3 million take up to around about 1.6 million. And you can already see the disinformation coming out. I was reading an article on MSNBC, which is a bit of a rag anyway, but that in order to claim the superannuation, you needed to show a drop in 20% of your income, which is not the case. You actually need to show a 20% reduction in your hours worked. It's got nothing to do with income whatsoever. So it's going to be interesting to see what happens there, and no doubt the industry funds are going to really be impacted. But again, we move on, and so they've got their little pocket. And of course, the real estate industry is being dramatically impacted. My mother, she's in a reverse mortgage, and she's waiting for an ACAT, which is aged care assessment, in order to go into a nursing home with my dad. And unfortunately, that took a little while. So we ended up putting her home on the market probably about, it was only about 3 weeks late. And now it's just sort of sitting there festering with obviously no open inspections. They've done videos of the home, but look, no one's putting their hand in the pocket at the moment. In fact, she came back with, gave me some anecdotal evidence that a couple of her vendors basically said that they would drop 30% of their asking price in order just to get it away. So on the other side of all of this, those people who've got good income, good cash flow, more importantly, able to leverage from the banks at very low interest rates, are going to be absolutely laughing, because they'll pick up really bargains of a lifetime. So where it ends up, look, we're not quite sure. But the other side of the equation is, of course, the landlords. And when we have a look at that, the landlords are going to be impacted whether they're commercial. So you can think of all the restaurants, the cafes, etc. Look at some of the strip malls, which are sort of petered out, but certainly up here they're slowly opening up. But there's not only is there going to be an issue now, but there's also an issue down the track. And I love your idea, Tim, and I think you should really get the IPA and certainly get in the ears of government to make, get rid of the entertainment non-deductibility, and at least have it up to $30, $40, $50 to get a big kickstart into the restaurant industry, particularly for those people who are on JobKeeper. Although long term, who knows what's going to happen in terms of this social distancing. So there has been a huge impact, but again, it gives us that little opportunity now to move into that real estate market, something that none of us have ever done at any time before. And really, for me, it's a gift and opportunity. I've got a good mate online, Sean, who worked once in the real estate industry. And look, there's a really good opportunity now to go out and tap all those commercial leases, and we'll go through that, because effectively there's a mandatory code of conduct, and there's no way out. In fact, many of the states have already legislated for the code of conduct, which I want to focus in on. The rental residential side is a bit more wishy-washy. One of the first things and good luck to Morrison, he did see it coming. In fact, Australia was one of the first countries ever to ban flights in from Australia. It's not from Australia, from China. So full credit to them, but unfortunately it was a bit after the Chinese New Year. So we still had, hundreds. I think we had, I remember the same day he announced this, there was about 60 flights from China into Australia. But we've got a huge freeze. He came out and said, look, there's no evictions for 6 months. And unfortunately what's happened is, to their full credit, they have been working as governments. And not only, I've never seen that before, where you actually got all the state governments and territory governments and the federal government working as one. So they've gone ahead and started to put in this 6 month no evictions element there. But of course, a lot of landlords are seeking to get around it. Although landlords should be very careful about that, because the vacancy rates are going to be quite astronomical, I would have thought. Landlords and tenants, I'll send you to a site and send you a link to the site where you can find out where things are going, because I really want to get down to the documentation and, more importantly, the commercial side. There's a mandatory code of conduct which has been signed by all the states and obviously the federal government, and that's quite extensive. But when it's mandatory, it means that any landlord and tenant that there's a current commercial lease in application, they must abide by 14 principles, which I'll take us through as well. So the real estate industry, I can tell you, is absolutely dazed and confused. When I have a chat with my real estate agent over in Adelaide who's selling on his property, they're all in absolute shell shock. And remember, real estate agents are generally the most optimistic people I've ever seen, but to see us all fall off the cliff is quite interesting. But the same way that we're going through, and we've all gone through, and particularly the accountants out there helped employers get the access to the JobKeeper. Hopefully many, although the incentive to help individuals access their superannuation, which is really a pretty easy process, is not really there. To me, this is a really good opportunity for us to step up, and once JobKeeper's out of the way, start to do these commercial leases. Although, with all due respect, what I'd be looking at is going out and sending letters out ASAP to anyone who's got both sides, both the landlord side or the tenant side, because in effect it applies from the 4th of April. So we're already 2 weeks into this, and it's going to last until the government declares COVID-19 no longer an issue, which they're expecting for 6 months. Just as an aside, you'll see a little bit later on the commercial side, that if a tenant has applied for JobKeeper, which basically is required to show a 30% reduction in turnover, then they are automatically covered in this code of conduct. Now, the code of conduct is not for like the BHPs of the world, etc. It is for small to medium enterprises. So we'll go through the relevant mandatory code of conduct. But for me, it's a great position, because on the other side is, if we have a look at most of the landlords, a lot of the landlords may well be entitled to a 6-month deferral in terms of their repayments under Australian Bankers Association guidelines, and hopefully their banks are applying those. So again, out of crisis, an opportunity always arises. Look, it has hit us really quickly, and again, it's great. Now, there's I was just doing some reading. There's over 8 million residential renters in most states. They do have eviction protection. The only one that seems to have come to the party at the moment is Queensland. So in Queensland, if you can show a 25% drop in your rent, or alternatively that your rent is more than 30% of your incoming income, then you are able to get a rental waiver for a period of time. So unlike the commercial, that doesn't require a payback. So that's an interesting scenario. I noticed both New South Wales and Victoria are focused more on the eviction side of things, but I dare say Queensland's probably a model for things to come. Originally, the measures promulgated by Queensland is you didn't have to show any financial impact, that everyone was going to get a rental waiver. on the basis that the underlying landlords were also getting a free ride there. But they got 400,000 letters within, or emails within a period of about 3 days. So they got them backtracking pretty quickly. Where they have done, though, is if you do provide a rental incentive, this is Queensland, in fact, it's most states, if you do provide a rental incentive, then you get a couple of things, a 25% reduction in your land tax, and also a deferral of your land tax payment. If you don't, then you have to pay your land tax on time. So we're in a pretty good position. So they use a carrot approach. Now I've got Bevan here. I have a commercial property manager asking for extensive financial information from my client. He's applied for JobKeeper, but we're wary to give too much commercially sensitive info away. Notwithstanding that, what information is reasonable to show hardship if the JobKeeper is available? That's a really good question, Bevan. Let me go through the code of conduct, because that's essentially what we need to do. Is from my perspective, when we have a look at it, that the fact that you've got JobKeeper generally means that you're in a pretty good position, that you don't have to show the financial information. Of course, you can imagine the commercial landlords are going to try anything on. Again, it's like an insurance company. It's just simply it's a poke and a they're obviously going to try everything on. So what we need to do is have a look at the code of conduct. I'll take us through that. Then I want to, more importantly, I won't worry about the 14 principles because they're covered in a letter. And you'll see with LightYear Docs, we've got an all-purpose strategy automation that you can choose residential, and a whole set of documents comes up for that. Commercial, a whole set of documents comes up for that, and then rural properties as well. The commercial brings in the code of conduct. So I'll actually go through and show you a rental reduction in terms of the commercial side. And then I'll set up and we'll have a look at a letter going out which covers the 14 principles. So for me, it's a great time to start to tap into real estate agents. We are building a separate section of the website which will have commercial leases, rural property leases, residential leases, etc. So that this is a nice little segue into that real estate market if you deem to see fit. So again, as I said, every cloud has a silver lining, and I'm sure that all of us have been absolutely busy on this one. So what I'm going to do is just a couple of things just to show you. So if I go to the LightYear site, and you can see here's my vault. So I'm going to start off at the home. You can see I'm logged in. So what it means from that perspective is quick guides is good if you haven't used our system before, but I'm going to go to the strategy center. The strategy center, so this video will be up and available in the strategy center probably within the next 3 or 4 hours. But I've put in a new section in the strategy info and advice toolkits, and you can see here real estate and lending letters and data capture. So that will now start to build out for commercial leases, residential leases, etc. But I have focused in on commercial leases at the moment, mainly because there's probably more money there for you guys at any point in time. Plus also the fact it's mandatory. So let's go through. You can see here there's a bit of copy I wrote this morning around it, and then we've got a nice little download box here. So this is just a Word doc, so you can basically do it as you see fit. So I'm going to have to, sorry about this, I'm going to have to in fact change it so that we don't have the markup that I've got there. So I'll have to go back and change that, but otherwise no markup. And I have to thank both Sally and Tim Munro for putting your tuppence worth in here to make the letter better than ever. So essentially this is a rental reduction letter for commercial leases. So let's go through. This letter has been designed to encourage commercial landlord and tenant to come to an arrangement based on the federal and state government's mandatory code of conduct for commercial leases as a consequence of COVID-19. The government states, and this is important, the code of conduct principles to negotiating amendments in good faith to existing leasing arrangements to aid the management of cash flow for SME tenants and landlords on a proportionate basis. As a result of the impact of commercial disruption caused by economic impacts of industry and government responses to the declared coronavirus pandemic. Now, I can't believe that's such one sentence, but anyway. Now, importantly, because it's commercial, what happens is we've got an existing lease agreement. You're going to see when we get into the code and also the document itself, that there can be an extension of the lease and amortization of any rental waiver can be paid out. And this applies to both SMSFs, both landlords and also tenants, although you probably won't find a SMSF being a tenant necessarily, unless it's running a business. Now, with that one, we need to put in place a legally binding agreement. Failure to do so, if you're just doing something running on an email chain, you know what these landlords are like, particularly if they're big ones, they're commercial, they're going to have a stream of lawyers, the claim uses, the Gaydens, etc. They're going to come and hammer you. So a lot of the landlords don't want to get into a binding agreement, so make sure that you get that, and that's what we're looking at doing here. And it's also, we've got to be careful about guarantors and security deposits, which are generally always required in terms of our commercial leases. So from a legal perspective, the rental reduction agreements used by LightYear Docs have been prepared and reviewed and signed off by Abbott-Family. So there's no legal professional provision issues as long as you're using the data capture. And I need to put a full stop there. If you want to, if it's going to get into a hardcore negotiation, then we can do a Zoom meeting with myself and Tony, and we can go through and help through those negotiations. Again, we're already 2 weeks into this, so we need to get moving. And of course, it's in the interests of the commercial landlords to defer things as much as possible. On the other side, you're obviously going to work for both tenants and also landlords. So it's important just to get this out here. Even if a landlord doesn't want to get your expertise, it's important for them to know and for you to also be in their face saying that this is a mandatory code of conduct, because certainly their real estate agents might be doing that, and who else is actually going to do it for them? Certainly not their lawyers, because the lawyers are only transactional. So the only people who are going to be in that position are you guys as their advisors. So this is a letter which will go out. Mandatory government commercial lease amendments now in force. We are writing to you as a party to commercial lease agreement. Existing arrangements are now subject to agreed federal and state government mandatory conduct, the code, operative from 3rd of April until the end of the government's JobKeeper program. That's the old English spelling. The objective of the code is for landlords and tenants to share the financial risk and cash flow impact during the COVID-19 in a fair and transparent manner. Now, the code applies to all tenancies that are suffering financial stress or hardship as a result of the COVID-19 pandemic, as defined by their eligibility for the Commonwealth Government's JobKeeper program, with an annual turnover of up to 50 million. So rather than going through the financials, I would simply be saying that it's required under the Code of Conduct that if you've been assessed as being eligible for the JobKeeper program, then the Code of Conduct applies. So put it back on the commercial landlord and come in with a pretty strong letter there for your tenant, saying, look, it's actually required under law that if you met the JobKeeper and you're under $50 million, then this Code of Conduct applies. Because then that will obviously, the landlord will have to start to go to their lawyers and all of that sort of stuff. So at least put them on notice and tell them it applies from the 4th of April and that you expect them to comply ASAP and backdated. So again, it's like a tennis match, put it over their side, see what happens. Now, landlords and tenants must negotiate appropriate temporary amendments to their leases, having regard to the code and to the tenant's particular circumstances. So we already know we've got JobKeeper going there. It is legally prudent and highly recommended for both the tenant and landlord that the negotiated terms be documented in a legal binding rental reduction agreement. Again, you can't trust either, well, you can't trust people anyway, so you just need to have that agreement in place. The agreement draft in line with code must cover the following. So these are the 14 principles, and I'll just go through those and then we'll go through the data capture and then we'll go into the agreement itself. So landlords must not terminate leases due to the non-payment of rent during the COVID-19 pandemic period. So that's not a bad position, but again, you've got to meet all the other principles as well. Tenants must remain committed to the terms of their lease, subject to any amendments to their rental agreement negotiated under this code. As you can see, this is a code. Is different from a set of laws. A code means it is a set of rules and laws that are binding upon both parties itself. Material failure to abide by substandard terms of their lease will forfeit any protections provided to the tenant under this code. So again, you can see that both tenants and landlords have got this set of rules that are binding on them. And this is what is so much better than, for example, the residential tenancies. So we're in a pretty good position here. Now, landlords, and this is the thing, must offer tenants proportionate reductions in rent payable in the form of waivers and deferrals, as outlined under the definition below, of up to 100% of the amount ordinarily payable on a case-by-case basis, based on the reduction of the tenants' trade during the COVID-19 pandemic period and a subsequent reasonable recovery period. So I think, again, that's going to be an issue that is up for negotiation. Now let's go down to 4 because it explains the formulaic side of it. So rental waivers. So if you've hit JobKeeper anyway, so it now means you're in 3. Now we go to 4. Rental waivers must constitute no less than 50% of the total reduction in rent payable under Principle 3. So if you're in 3, you could show that there's a rent there. Then with JobKeeper, obviously it's 30%. It now means you're up at 50%. Whether you want to go further on that, then that is going to have to be an agreement. You're going to have to show your proportional reduction, your financial. But if you're JobKeeper and you're 50%, then you're basically in there, if that makes sense. Should constitute a great proportion of the total reduction in rent payable in cases where failure to do so would compromise the tenant's capacity to fulfil their ongoing obligations under the lease agreement. So again, you don't have to show that you've had a reduction of 80% or 90%. Just show that effectively that if you can't pay the rent, it's going to actually have a significant impact on business. So it's sort of you look at your employees, obviously they're going to be on JobKeeper, which again is a bonus there for the landlord and needs to be put out, that if they're on JobKeeper, then that's going to help financially to make it more viable. But if the rent is just simply too much, then it needs to be reduced. Regard must also be had to the landlord's financial ability to provide such additional waivers. Tenants may, now this is the important one for SMSFs, and I'll just highlight this one. Now, when you go through this process, it's an either or. Because it's a mandatory code, what it effectively means there is that that they have to come to a stage. Daniel, I'll have a look at the $50 million turnover when we get to the code, which is embedded into our document. So when we have a look at the code of conduct, so the first thing is it applies. It doesn't matter if you've got the $50 million turnover, annual turnover 50 million. So I would say that that's going to be probably for the 30 June 2019 year. But maybe you can probably help me out there, Tim, if that's possible, just to when you think that annual turnover will apply. But if you've got that, you've got the JobKeeper, then you're writing this code of conduct. So it means you've got to get together and you're forced to get together and make a decision. And that decision has to apply now, and it applies from the 4th of April. Now, the alternative to that, because a number of people have said, look, I've got my SMSF and they're leasing it back to my business. Why would I want to reduce my rent there? Because effectively I'm putting money from my business, which if it goes under, at least my money is sitting in my self-managed super fund to protect it from bankruptcy. And absolutely, I agree with that one. But you still need to go through the process of having at least the notification from the landlord, being the SMSF, going to the family trust or family company, offering them to abide by the code. Then you'll need the family trust or family company to waive the requirement of 50% minimum waiver. So again, you've just got to be careful on that one. It's a code, so everyone fits in here. There's no, do you know what I mean? There's no squeaks out. There's no exceptions to the rule. So what I would say is that if you go down the track and you find that a business has been really hard hit and the landlord hasn't applied the code, then quite clearly you'll be able to sue the landlord for loss or damages for that case. So that's why it's absolutely crucial for landlords to get in line. Now, payment of rental deferrals by the tenant must be amortised. So this is important. So it's not unlike the rental waivers that are offered by Queensland, where there's simply no payment, no amortisation. Here, the deferrals must be amortised over the balance of the lease term and for a period of not less than 24 months, whichever is the greater. So you're going to have a look at what's available at the end of the lease, and there may well need to be a lease extension. So let's go to the stat charges. So any reduction in stat charges, so land tax, council rates or insurances, will be passed on to the tenant in the appropriate portion applicable under the terms of the lease. So again, if we've got a waiver of 70%, then we also have to pass on those outgoings on 70%. 7, landlords should seek to share any benefit it receives due to the deferral of loan payments provided by a financial institution as part of the Australian Bankers COVID-19 response, or any other case-by-case deferral of loan repayments with the tenant in a proportionate manner. So again, I'm not sure exactly what they're getting there, because you'll see that if I just drift in and we have a look up here, I've got the ABA, the Commercial Landlord Relief Package. Australian banks have extended the 6-month deferral of loan repayments to include commercial landlords who meet specific criteria. So if we have a look here, during COVID-19, banks have also agreed to not enforce business loans for non-financial breaches of a loan contract. But the new measures will apply to all sectors of the economy on opt-in basis under the conditions that for commercial property landlords, they provide an undertaking to the bank that for the period of the interest capitalisation, they will not terminate leases or evict current tenants for rent arrears. So it sort of works a bit of both ways. So again, you can start to see where the code is coming in with the bank. The customer is advised that his business is affected by COVID-19. The customer was current in terms of existing facilities 90 days prior to applying, and interest is capitalised, meaning if the term loan is extended or payments are increased. So again, we've got amortisation that applies in this case. So if we go down here, 8, so when we have a look at further outgoings, landlords should where appropriate seek to waive recovery of any other expense or outgoing by a tenant under lease terms during the period the tenant is not able to trade. Again, you do that on a proportionate basis, although it does talk about waive. If no negotiated arrangements under this code necessitate repayment, this should occur over an extended period in order to avoid placing an undue financial burden on the tenant, which is a tough one because we really don't know what's coming out of this in the next 2 or 3 months. As I said, look at what's happened the last month, where we are at 30 June, who knows what's going to be the case. Now, no repayment should commence until the earlier the COVID-19 pandemic ending, as defined by the Australian government, or the existing lease expiring. So that's fairly important because the JobKeeper lasts for 6 months, but we might find this COVID-19 pandemic ending at a lot greater time down the track. Now, no fees, interest or other charges should be applied with respect to rent waived. No fees charged or punitive interest may be charged on deferrals. So obviously that has to be excluded. Landlords must not draw on tenant security for non-payment of rent, and that includes guarantees as well. The tenant should be provided with an opportunity to extend its lease for an equivalent period of the rent waiver. So if the rent waiver goes for 6 months, then it should be extended. Landlords agree to freeze on rent increases, which is absolutely crucial. And landlords must not apply any prohibition on levy of any penalties if they don't open for relevant opening hours. So they actually, believe it or not, they have thought the whole process through. So this is again the letter. So we're putting the principles down. It's there. It's both for the landlord and it's also the tenant. And most commercial landlords probably haven't seen this, and the first time they'll see this, they'll obviously run to their lawyers. But again, by the time you've just got to put the landlord on notice that this applies now, and you've got to start to work negotiating now because it's backdated the 4th of April. Don't let the lawyers get involved, because you know what that's going to be like. It's going to be 6 weeks to 2 months. Now, we've collaborated with commercial lawyers, Abbott-Family, to provide to landlords and tenants a legally binding rental reduction agreement that sits alongside the current existing commercial lease agreement to the parties. So the 3-step process is the tenant and the landlord negotiate COVID-19 revised terms using the data capture form attached, send back to us as soon as possible so we can work with Abbott-Family to draft your rental reduction agreement in line with the 14 mandatory code of conduct principles. We will forward both parties the rental reduction agreement, and then they have to be signed. Now, it can be signed by a Zoom conference, or alternatively, they can just do it by email, do it by PDF, or send it through post. Now, if SMC tenant has applied for JobKeeper, then it's mandatory to apply for the code of conduct from the 3rd of April unless the tenant waives their rights. At such times of the essence, each passing day has a monetary impact. If you need help in negotiating process, we're happy to be of assistance. Failure to complete a rental reduction agreement leaves both the landlord and also the tenant exposed. So the data capture, the first one is, what is a reduction in turnover by the tenant as notified to the ATO under the JobKeeper program? So the key here is because you've already gone on foot and notified the tax office of what the rental reduction, the turnover reduction is. If you simply tell the landlord there, from my perspective, is we've abided by Commonwealth laws, which again, it's a Commonwealth Crimes Act if you misrepresent to the Australian Taxation Office, then if you can abide by that, then they should be quite satisfied with that. Alternatively, just provide the information you did provide to the tax office, knowing there's going to be at least a 50% rent reduction. Now, do the landlord and tenant agree to waive the rent rate waiver? So it's either yes or no. So if it's a no, then what's the proportion of the rent abatement? And then what's the optional repayment? So what period it's going to be? The minimum is 24 months, and is the lease extended? So they're the 3 or 4 major criteria that allow us to do the rental reduction agreement. So what I'm going to do is I'm going to pop now and I'm going to have a look, just while I'm here as well. I'll send through, obviously, the Australian Bankers Association website. I'll also send you through this rent.com.au, because it's a pretty good snapshot on each state what happens with the residential rents. As I said, there's 8 million residential rentals, so start hitting up those real estate agents would be great. So if we go here, and you'll find that it is in our business and commercial agreements. So you go into the category and you'll see here is the rental reduction agreement. So it's $99. In fact, we've had a couple of advisors and accountants who have sent their clients along to that, and we've had some great feedback just from SMSF trustees who've used it. So rental reduction agreement, I go and start the document. Make sure you have a look about the product, general information and FAQs, etc. Again, if you are completing this based on data capture, then it is not going to be classified as the provision of legal advice, which is good. Now, if it's quite a hardcore landlord and they are stonewalling through their lawyers, then feel free to come to Abbott-Family. Tony's got excellent experience when it comes down to doing negotiations, so we can do it from there. Of course, we've got Michael Jeffries as well, who's really good on that side. So more than happy to step in and give a bit of biffo on your side if need be. So let's start the document. Again, we just got to choose our folder. Kush, thank you for the feedback. You'll find that the letter is, if you go to LightYear Docs in the Strategy and Support Centre, it's actually sitting there. It's a new thing under the Strategy Info and Advice Toolkits. So we're going to build this out bigger and bigger all the time. Certainly nowhere near as good as Tim's stuff, but definitely for anything that leads into a data capture so that you don't breach that legal professional privilege, we will be putting it up onto the support centre. So hopefully you'll find that. So I've got the conference. What I'll do is I'll just go in and we'll do the rental reduction. So you can see we're in, this is what we call our iframe, which is a pretty powerful tool. As another aside, you can see here, I'll just put this rental reduction. Yeah. So you can use your tag, or probably if you're going to go through, why not use the Abbott-Family tag from a legal perspective, depending on who you're going to. So we've got the landlord. So remember, we could use, I'm not going to use it from this perspective. We can, actually what I'll do is I'll might as well use an SMSF. So we've got the Smith Family Super Fund. Now ideally, we've got a company, so we go to these, oops. And I want to show you the code is actually embodied in here. So far so good. Look, it doesn't matter whether it's residential or anything at the moment. So Smith Street, Sydney, New South Wales, 2000. I'll just put in there one director. So I've got the old Johnny Smith. I'll put in the telephone number there because all this goes into the lease agreement. Email address, John. Oops, right, so the typing's hopeless. At smith.com.au. Okay, so is there ABN? Well, let's put the ABN for our super fund, and then we go to next. Now, if there's dual landlords, a couple of individuals, we can add another if you want to do that. So you can add that other one. Here we've just got one SMSF, obviously. Now we're moving to the tenant. Now what I've got is I'm doing it to the family trust, the Smith Family Trust. Now I don't want you to get hoodwinked that this is only for SMSFs. This applies across the board for any client, both landlord and tenant. Now remember, you guys need to, when I have a look, sorry, Smith, Price Limited, you guys need to work out which side that you're working for and hopefully get into a negotiating position. But look, if it's not for you guys, I can tell you what's going to happen. It's going to take years for this to work out. Before you know it, the COVID is already out and about. So again, if we have a look at JobKeeper, it's great to bring the money in, but this is the other side, is reducing those expenses. For a lot of those clients, it really makes a huge difference. If you could reduce it down by 90% just for 6 months or 9 months and have it later on, that's going to make a huge difference, I would have thought, to a business. So for accountants out there, make sure that you get in touch with your clients. What did I have, John? Smith.com.au. And again, the ABN. Just putting in a whole lot of rubbish there. Okay, so let's get down to the one. Now, what I've got here is 3 types. Now, when I choose, actually different set of forms and different set of documents come up. Now, obviously the one that I want you guys to focus in on, because this is where the money is, there's more money involved in commercial leasing. The parties are more likely to obviously move ahead pretty quickly. They are going to be a lot harder negotiation, and Bevan, you've obviously found out, because you're always going to have landlords, they're always going to say no, I don't believe it. But again, if you can go back to the JobKeeper or you need help there from negotiating, you've got Mick from our office, or you've got Tony and myself if you need lawyers. So we're more than happy to help you, or you guys go in hardcore as well, because there is a code of conduct which I'll show. So you can choose, they're all different ones, but I'm going to go commercial. So it's unit number 101, well, no, 1010. So, and that is in 100 Brown Street, Sydney, Wales 2000. Is there a guarantor? Yes. Does the landlord have an agent? Yes. So we put that in. So we've got the landlord's agent, first name, Marnie Jones, firm, what's the big one? Oh, Colliers. And then we can put in our ABN. Oops, sorry, where did I go? I'll go back, I just went back. Landlord's agent, sorry, I put the ABN in there. Okay, 5 Street, Sydney, New South Wales, 2000. And then we put the agent's telephone in there. And the email, colliers.com.au. Okay, now the guarantor. Actually, what I'll do is I'll drop off, you can put the guarantor in there, but I'm going to drop off the guarantor because this is between 2 superannuation funds. But we are using an agent just to keep things at market value. Okay, so date the agreement is to commence. So that's easy. So we go back to the 3rd of April. Date of the deed, we can put that in today. So again, it's covers the back. Now we might not get around to actually doing it until May, but we can still do it from the 3rd of April. Now we need to put the date of the existing lease in there. So 0107 to 015. So it's a, in fact, we'll do a 2018. So it's a 5-year lease, so it gives me plenty of time. Okay, so the adjusted rent. So we might put, in fact, we could just go, just take this example here. A quarterly rental until termination date, which is then to be repaid over the remainder of the term at a rate of an additional X dollars per month. And you can work that. I mean, you've that's your negotiated amount then. So you want to have both. You need to have both the payments, the waiver, and then also the repayment amortised. Remember, it meets the code of conduct. So when the Australian Tax Office compliance, so you've got a few different buttons here, but what we can do is when the government announces COVID-19 pandemic over. So that's what we've seen anyway, that comes out of it. Now the outgoings, so let's go, so we've got a 50% reduction in there. The description of any additional uses. So for example, it might have been a restaurant, so the tenant can sell wholesale food and takeaway. Special conditions, so the tenant may sublet for the remainder of the term of the lease. Okay, and then we go down to the signers here. And that other one, that terms and conditions, I can go back. That's where you would actually put the extension of the lease, if that makes sense. So I'll wait for it to come up. I've got the download here. But if you wanted to, so I've got the download there. Remember, I can go back at any point in time. I'm going back into the vault, going into conference. You'll see there, remember that's the folder. The last one there, I've got the rental reduction agreement Smith. That's the one I do the relaunch. And then effectively what I'd do here, if I was going to extend the rent, I've got special conditions, the remainder of the lease, and then I've got the, and then, because what this does is this overrides or extends into the lease. So the lease is to be extended by a period of 12 months. Okay, so I'd then be able to save that. And that would be my second one. But what I'll do is I'll just go through this one here. So you can see here, we're pretty upfront, COVID-19 commercial property rental adjustment. This is between the Smith and the Smith, but remember this could be through Westfield. And then obviously one of the parties in Westfield just got to make sure that you've got a $50 million turnover. So someone like Cotton On or whatever will be included there. So it's under the Abbott-Family letterhead with sign off down here. Now what we've got here is a government announcement relation. So you're not going to find this obviously if we tick the residential or rural, but essentially bang, we're right in the middle. So this is an additional amount so that both parties know exactly what they're getting into, because this is the law. So what you're doing is you're framing up your commercial leasehold by way of the law. So I think, you know, for the purpose of this code of conduct is to impose a set of good faith leasing principles for application of commercial tenancies, including retail, office and industrial. So if you've got office and industrial, you use this commercial between owners, operators, landlords and tenants, where the tenant is an eligible business for the purpose of the Commonwealth JobKeeper program. So what I would do there probably, Bevan, that if it seems to me that the code, the eligibility applies as a reference point to the JobKeeper. So if you get the JobKeeper, then you're entitled to the 50%. If you want to go above the 50%, then you'd have to have the financials. And again, we're not looking at anything disastrous. We're actually looking at something up front in your face. So these principles will apply to negotiating amendments in good faith to existing leasing arrangements to aid the management of cash flow for SME tenants and landlords on a proportionate basis as a result of blah, blah, blah. Now, this code applies to all tenancies that are suffering financial stress or hardship as a result of the COVID-19 pandemic as defined by their eligibility for the program. Again, another up your face, annual turnover of $50 million. Okay, here's an interesting one. The $50 million annual turnover threshold will be applied in respect of franchises at the franchisee level and in respect to retail or corporate groups at the group level rather than the individual retail outlet. So that's not a bad one. The parties to this code concur that during the pandemic period, as defined by the period during which the job program is operational, that's 6 months, the principle of this code should nevertheless apply in spirit to all leasing arrangements for affected businesses in regard to the size of financial. So what they're saying there is, although we're talking about the $50 million, we really should be using this code for people over 50. So give it a crack anyway. So actually a lot of this code has been, I think Victoria's already passed it, and I think New South Wales as well. So let's have a look. The objective of the code is to share a proportionate, measured manner the financial blah, blah, blah. So there's a whole lot of stuff there. The following overarching principles of the code, negotiation, good faith, you know, you have agreed, so on and so forth. So have a look through all those anyway, but this becomes part of your document. It's like a preamble, a deed. Then we go down to leasing principles. Remember, we've got all those. So they're actually embedded into that letter that you send out to your client. And what I would be doing, I'll be using this letter that we got here, and I would be sending this out as an email to the clients with obviously an email, and then I'd put the data capture as a PDF and see what comes back. Better still, work with real estate agents, go and tell them, are they aware of this? You can go and facilitate that process. Again, it's another really great distribution source there for you. Binding mediation, where landlords and tenants cannot reach, the matter should be referred to applicable state or territory retail thing, and that's actually has to be, that's fast-tracked. So if you don't get anything, you do it straight away. Following definitions, have a look through that. Code Administration Committee, commencement expiry. So this code comes into effect in all territories from the date following the 3rd of April. So that's the 4th of April. And then we go down to examples, which are great. So the following scenarios, examples only. Qualifying tenants will be provided with cash flow relief in proportion of the loss they've experienced. That is a 60% loss in turnover resulting guaranteed 60% cash flow relief. At a minimum, half is provided as rent-free rent waiver for proportion of which the qualifying tenant's revenue has fallen. Up to half could be through a deferral of rent, which is to be recouped over 24 months. So if the tenant's revenue has fallen by 100%, at least 50% of the total cash flow relief is rent-free, and the remainder is a rent deferral. If the qualifying tenant's revenue has fallen by 30%, then at least 50% of total cash flow relief is rent-free, rent waiver, and the remainder is rent deferral. Care should be taken to ensure that any repayment of deferred rent does not compromise the ability. So let's just go back again and have a look at that position here, where we look at it. So landlords must offer tenants proportionate reductions in rent payable in the form of waivers, which is no rent, and deferrals, which we looked at the thing, of up to 100% of the amount ordinarily due and payable on a case by case. Now, rental waivers must constitute no less than 50% of the total reduction in rent payable. And the rest can then obviously be a deferral, as we've seen there. Have a really good look through these, that example that we've got there, so it'd be quite good. But now this is the commercial lease rental adjustment. So we've gone through the code. The code is basically there. You've got here the background. The landlord and tenant hereby agree. The landlord leases to the tenant the premises under a lease agreement between the parties at the rent on conditions set out in the existing lease, which was dated 1st of July. So it doesn't get rid of the existing lease. It just lies over the top of it. It's like a codicil to a will. It just basically sits over the top there. As a consequence of the slowdown in the economy resulting from coronavirus and through no fault of either the parties' existing lease, the landlord hereby agrees to adjust the rent for the period as shown in the agreement. The guarantor, if any, will be released their obligations for this period in terms of the rent amounts owing above the adjusted amounts. And the rental adjustment agreement is made on the 3rd day of April. Remember, I plugged that in there. If not otherwise covered in this agreement, definitions, terms and conditions of the existing lease agreement apply. So we've got the landlord, we've got the agent in there, we've got the tenant, we've got the guarantor as well, we've got the premises, we've got the term of the that's going to be there, the adjusted rent, a quarterly rental of $1,000 until termination date, which will then be repaid over that period of time. Again, negotiate within that context. How is the rent paid? Paid to the agent. Obviously, they're not going to impact the security deposit as per the code, and then so on and so forth. You can see here you've got the wholesale food and takeaway as well that's basically sitting in there. So we go through that. So it's a fairly, we've pulled this off our normal commercial agreement. Importantly from here, when this agreement is signed by both parties, it is a deed at law, which means it's the strongest you can get. It's probably even stronger than the underlying lease agreement. So I'll put that in there as part. So we've got there the going back to the relevant elements there. The items adjusted rent is basically put in there, and everything references back to those original documents. Obviously, there's not going to be any rent review for the period, tax invoices, continuation. So we go down there, and then we can have a look. The special conditions, tenant may sublet for the remainder of the term of the lease. There would be a rent extension if I put, remember I put that in, but that wasn't, this was the first agreement. So we've got the executed landlord and tenant, and basically you're off and running. So you've got a pretty good little element there for us to essentially work with. So that's up and available now. If I went in and had a look and I did a, let me go back here, and although it's not going to apply, just going to have to bear with me. I'll go back to conference. I'll look at my rental reduction agreement here. So I'll reset that. And then what I'll do is, now this wouldn't apply in practice. Well, it could if we have a look at it. If we go down the, well, it couldn't apply in practice. So let's say that we've got the landlord as the fund. Tenant is an individual. So we've got John Brown, who is not covered by the, it's not related. So just want to show you the difference. Apartment 101005 Smith Street. So we go through premises details. Now it's a residential. So we've got the residential there, and what I do is I pick up John Brown's address here. So again, this would be obviously 1010. There's no guarantor. Does it have an agent? Yes. So it's the same rent adjustments. Now here, it's just a waiver if this if they've agreed. So a quarterly rent, so a quarterly rental until the termination date for the COVID-19 pandemic. So if we have a look at that, we can just go through that. Again, we've got the termination date there. Outgoings are obviously 0, NA, and then you can put in special terms and conditions if you want, NA, like if you want a repayment. And then because I've chosen, let me just check that I have done residential, yep. So I will then go down, finish that, and suddenly I've got a residential lease, which you'll see. And the same will happen with rural as well. So I download the document, poke it up there. You can see suddenly it's a residential property rental adjustment lease. In fact, I just did this. I'm renting a property here at Sunshine Coast. I've just gone and given my landlord, well, not my landlord, I gave my agent one of these as to what I wanted to pay under Queensland. And then I've actually got on the front foot there. So again, we've got the whole different processes. You can see guarantor is not applicable. We've got the security deposit, which is obviously the bond. We have the outgoings, etc. But now it's a rental adjustment agreement for a thing. But notice how there's no code of conduct that pops up there as well. So anyway, have a look at that. Let me just go back and finish from that perspective. When we have a look at that, we've got a really good, strong letter to send out. It's up to you. If you've got a on your database or anyone who's involved in commercial lease, and I'm sure Tim and Sally and a lot of you guys have got that, then send that email out and send it out again, and then at least get on the phone, because this does apply. And the good thing about it is the key is that it's mandatory. And as I said, it is a law unto itself. A code, if you go over to France and Europe, they don't have common law, they don't have statutory law, they have codes. So, and again, even in Australia, we have the criminal code, which is a set body of laws that everyone must adhere to. Now, if you've got a $50 million turnover, you've got the JobKeeper, bang, you're right in the middle of this. But again, a code of conduct should apply for people with higher turnover. But again, it's suggested, it's not a mandatory code of conduct. And as I said, each state will then be abiding by this and putting regulations in. And certainly I'll keep you updated. So what I'll do is I'll send this webinar, the video, out a little bit later on. I'll give you a couple, what I'll do is I'll attach the letter as well. And again, feel free to make changes. It's just a document, but know that you can find that up on the Strategy Centre. The other one is I'll send you through the link of the ABA, but more importantly, have a look at that, the stateofplayonrent.com.au in terms of residential rentals. And again, if your kids are out and about and they're renting a property, make sure they get involved. My daughter went to her agent and got a reduction in rental, but it's just simply an email trail between the agent and also my daughter. The problem about that, that's not a binding agreement. If the landlord then gets rid of that agent, then it can come back and say, well, hold on, we didn't negotiate that, that was the agent. So you just got to be very careful about that, and you'll end up in this horrendous legal battle, which basically you don't need to. Bevan, again, how would it apply to uni residential accommodation? Look, that would be, I would call that a residential accommodation again. If your daughter's at Monash in Melbourne, have a look at that rent.com.au. Mainly means that it can't be evicted. It's good. I might as well do it while I'm here just to show you guys around before I finish off. Again, the other one is make sure that your kids go and get their $10,000 out of super, because it's better to have it out now, because this is it's a bit of a gift. So if I go to the rent.com.au, I'll go down to New South Wales, I'll go down to Victoria. Some of Victoria's rental law reforms are due to come into effect by mid-year will now be delayed. So they went through, they've changed the Residential Tenancies Act, but basically it's been there's been a lot of changes. But the announcement of a $500 million support package for residential commercial tenants and landlords, with emergency legislation due to be put into Parliament, in fact, today. So Queensland was yesterday and Victorian today. So this package includes a 6-month moratorium on evictions and rental increases, $420 million land tax relief for landlords, and this is the one we'd be looking at there for you, Bevan, and your daughter. So there's land tax relief for parties that discount rents in the pandemic-related hardship. So that's basically where you'd be going there if they want that land tax relief. Remember, that's more the carrot approach compared to Queensland, where you've got tenants to be able to claim relief if they've lost 25% of their income, or they've got their rent exceeds 30% of their income. But then they need to provide proof of finances, as opposed to where I believe that commercial side of the equation is. Okay, I've just got a couple more questions. Okay, well done, Tim. And look, again, I see this as an amazing opportunity to really get on the front foot and be in the face of real estate agents who are dazed and confused. So Donna from, I'm a bit unsure. So if my April turnover has been affected by COVID-19 by approximately 50%, I'm entitled to a 50% reduction in commercial rent for a period until COVID-19 ends. Is this to be repaid over the end of the lease, or is it 50% rent free? No, everything everything you have has to be amortised. So if you, whatever you take now by way of a reduction, and 50% can be rent-free now for a period of time, and then a deferral for the rest of your lease, but essentially you're going to have to make a repayment. So Frank, maybe may have missed it, what would we invoice clients for these sort of agreements? It depends on, Frank, if you get involved, sorry Don, if you have a really good look at that example as well, which I'll just flick on to you here, which I'll flick on from the example. So the commercial. So I'm just going to put this on for everyone to have a look at. So it's the residential. I want the commercial. I want to have a look at that agreement, the example, which I think is a really good one there. Okay, so I'll put that one up, Donna. So that gives me a really good example. So everyone should see that one as well. Okay. Now, with that one, it depends, Frank. I would have thought if I went to a lawyer to do this, which, you know, one is going to take, by the time the lawyers get it out, it's going to be the end of the term anyway. The lawyer's probably going to charge maybe $1,200 for this specialist contract. If you'll get involved in the negotiation, it could be a bit more, but I would have thought around about 800, 900. Tim, if you're there, have you got any ideas on what you would be charging for this? Because I know Tim's obviously is obviously pretty good at making charges on that. But if not, look, I'll send out some information anyway with what the expected charge. But I would say probably around about $800 minimum is around about that case. But you can see how quickly it can be done. The main thing is to do that negotiation. Anyway, we're a bit over time. Thank you all for attending. It's Grant Abbott signing off.